On Friday, we saw stocks come crashing lower and the fear and greed index all the way back into neutral territory, almost dead smack in the middle. And the question on everybody's mind is, ever since last Thursday when Jay Powell took the podium at 3 p.m., stocks have been struggling. So is Jay Powell responsible for stocks selling off at the end of last week? On this channel, we've been talking about this for quite some time. Everything in the economy is not as good as what they try to lead us to believe. For instance, we now see Advance Auto Part to close hundreds of locations following sluggish performance. And think about how many people are going to be out of work when 700 of these locations close down. Last Thursday, when Powell went out there and took the podium, Powell essentially says no need for the Fed to rush rate cuts given strong economy. Now, we know a lot of companies are laying off employees. We just showed Advance Auto Parts for one, but let's talk about this, right? What is the expectations for rate cuts at the next FOMC meeting? Now, keep in mind, we are only 31 days away from the next FOMC meeting. There was over an 80% chance the Fed was only going to cut rates by 25 basis points, but since last Thursday, that has dropped drastically. And now there's the 38.1% chance the Fed is potentially not going to do anything at the next FOMC meeting. We can see the Fed interrupted the stock market's Trump rally. What comes next? And if we scroll on down and look at this graph and we look at where some of the indices have been, we see the Dow Jones has been up as much as 5.2%. Then late day Friday, it was only up about 2.9%. However, the NASDAQ at its lowest point was up less than 1% since the election. So is this going to be a week where we start to fill gaps? Now let's talk about some other things real quick. Yes, stocks are crazy expensive right now. These 5 charts show just how extreme valuations have become. So we started off talking about Jay Powell and what he's going to potentially do with interest rates. But also, if we go over and we look at some of these charts real quick, for instance, we look at the CAPE ratio, and essentially it is the 3rd highest on record. And I got to be honest with you, last time it was higher than where it is now was during the dot-com bubble burst. So are we headed for another major stock market sell-off like we saw in the 2000s? Then we come over and we look at the price to sales ratio. Forward price to sale ratio, highest since 2000. So essentially, it's the highest it's been in 24 years. Now, I got to be honest with you, that doesn't give me a lot of confidence in the stock market. Then we come over and look at price to earnings ratio. It is higher than it has been over the last 3 years. And let's not forget the Buffett indicator, right? Buffett indicator is basically telling us, watch out, I do not want to be a buyer in this market. And we see right here why Warren Buffett's been selling so much stock. And again, Warren Buffett's no fool. He knows the market is extremely overvalued. Then we come over and look at equity risk premium, and it's at one of the lowest levels we've seen going all the way back to 2002. So we got to ask ourselves, is the stock market headed for a very rough patch? Now, if you do think stocks are headed for a rough patch, I want to show you guys a stat brought to us by Almanac Trader. And that was week before Thanksgiving, Dow Jones have been up 20 out of 31 times, but down 6 of the last 7. And as we scroll down and look at this stat, right, this column right here is the Dow, been up 20 times, down 11. S&P has been up 18, down 13. NASDAQ up 18, down 13. Russell 2000 up 16, down 15. So it's kind of a mixed bag in terms of the Russell. Then we tie that in with the recent price action that we see. We see the Russell 2000 is now deep within to the election gap. Now, remember, last week I shared with you guys with a stat that basically shows right now we are in a very bullish period of time from last week all the way until the last week of this year, when the trailing S&P has been up 10% or more. We have been up 29 out of the last 33 times. So this is a little bit of good hope out there for the bulls. And when we look at the most recent investor sentiment survey, we saw that this week we had another very bullish reading out there at 49.8. Now, I do got a sneaky suspicion when this survey comes in again this week, it's not going to be nearly as bullish as what we saw this week. And let's not forget that fear and greed index is almost dead smack into neutral territory. Let me know, do you guys think we'll push over into fear territory or over into greed? Which way will we break out of neutral first? Let me know your thoughts in the comment section down below. Now, this week, we have a lot of earnings still to come out. When we come over, we look at the big expected movers out there. We can see TCOM expected to move on Monday, plus or minus 12%. Then on Wednesday, Zim is going to come out, is expected to move plus or minus 17%. Jack in the Box plus or minus 15 or 16%. We also have Neo and Snow expected to move 13 to 14% each. And let's not forget, on Wednesday, it's also going to be very big. Not only do we have NVIDIA, but we also have PANW. Now, we know recently NVIDIA started to pull back here just a bit. And on Friday, NVIDIA was almost able to make it all the way back, closing the gap from the presidential election. However, let's go take a look at SMCI as well, because SMCI stock in spotlight as the listing deadline nears. And, it wasn't too long ago where SMCI was, rocketing up to the moon, the AI hype and all that fun stuff. And now when we scroll this chart out, we are already now back below this big consolidation area that we have. And the question is, will SMCI end up going bust? Are they going to have to be bought out by another competitor? Or are they going to be able to save themselves from being delisted? Now, I want to bring it to your guys' attention. There is no published 80% sale with Apex Trader Funding at this moment. But if you use the link in the description box down below and use promo code Mike at checkout, I've been told that 80% discount is still being applied. Now, here's another warning sign for the stock market. Tom DeMark says stock market is nearing a top as he draws 1929 parallels. Now, you might say, who is Tom DeMark? He's the man that created the 9 count, 13 count indicator. We talk about this on the live streams where I stream my trades live during the New York session. If you want to make sure you don't miss the next time I go live, make sure you're subscribed and the bell notifications turned on for all. When we scroll this chart down real quick, some of the things that this article talks about, right here, we can see that it basically goes on to show where the market is looking at the 9 and 13 count indicator. He's also advised investors like Paul Tudor Jones, Leon Cooperman, and Stephen A. Cohen. Now, when we come down here and we look real quick, we can see right now, we can see from March of 2009 in blue, and then look back in December 1914 to 29. And what he's going on to say is these two charts look very similar, where before the 1929 stock market crash, we saw the Dow Jones up 627%. If you look at where we're at right now, 587%, 627% would just be a little bit higher. Now, the market is also saying there still could be a little bit more upside from this point of view, but he's also, listen, will there be a possible 13 count that forms up there? We can see that in past, going back on NVIDIA, 13 count, we drop, 13 count, we drop, 13 count again. Well, we're not far away from that. And NVIDIA does have earnings coming out this week. And if NVIDIA and the rest of the chips continue to sell off, that is going to be problematic for the stock market. As we come over and look at the dollar index, we see the dollar index has been on a tear to the upside. However, on Friday, could this hammer candle be part of a hanging man reversal pattern? Keep in mind, the hanging man reversal pattern is the weakest of all reversal patterns I look at. And we do have the ABC pattern completion up here at 107.83. Now, with the dollar rising, we also want to take a look at yields, and notice yields on Friday were able to break out to a new multi-week high. However, it closed slightly down again, basically forming a candle of indecision. Then when we come over and look at the precious metal gold, notice where we come down to right near the 50% level and right near a high volume area on the composite profile. Now, Friday, we end up having a doji candle, basically a candle of indecision, and it's also an inside candle, meaning the high was lower than the prior candle's high. The low was higher than the prior candle's high. And what that sets the stage for is we're likely going to get a breakout or breakdown from this pattern. And if we look at the economic calendar for this week, we can essentially see that on Monday, we have no major economic news coming out. We look over here on Tuesday. On Tuesday, we have building permits coming out at 8:30. On Wednesday, no major economic news in the US. On Thursday, we have the Philly Fed Manufacturing Index at 8:30 a.m. Then at 10 a.m., we have existing home sales. Then on Friday at 9:45, we have flash manufacturing PMI, flash services PMI, revised consumer sentiment at 10 a.m., and revised inflation expectations. So in terms of news catalysts out there, we lack the news catalyst, and we got to see, can we see gold finally start to bounce back up, maybe making it back towards this high volume area right over here. Now, one of the reasons why I like this area right up in here is not only is it a high volume area off the profile, but also if we grab our Fibonacci retracement tool, measure swing high, down to the swing low. Notice the 50% level comes right near that high volume area on the composite profile. So we kind of have a confluence of events. And we'll see this week if traders and investors start to flee into safety and start to go into gold. Now, if there's a fear that the Fed is not going to be cutting interest rates, that may open the door to a much deeper correction out here in gold. We can see out here on the daily chart, the MACD indicator still looks horrible, still extremely bearish out here on gold. Now, when we come over and look at the SPY versus HYG, so SPY versus high yield bonds, and notice we've talked about this for quite a while now. As the S&P 500 has come up, making new highs, look at how the HYG has performed. HYG has not been able to go back and make at least recent highs. We can actually see we're actually making a lower high when the S&P was making new all-time highs. Then we look at the Dow Jones versus the transportation index. What do we see? Well, transports broke out when the Dow was breaking out. That's kind of what we would expect to see. Then we come over and we look at the yields. You can see we basically had the push up. We had this consolidation. Now, if we start to see a steepening of the yield curve right here, that is also going to be problematic for the stock market. Now, on Friday, we can see how all the indices were in the red, and we had 69% of issues declining on the day. Then as we come over and look at the sectors, the only two sectors in the green on Friday were utilities and financials. Now, utilities, think about that more as being defensive. Then as we come over and look at how the 1 week performance was of all the sectors out there, the only two sectors that were in the green, financials led the way last week, followed by energy. But when we come over and look at financials, we can see they have this upper level consolidation. And are they going to benefit from Jay Powell potentially not cutting rates at the next FOMC meeting? Now, if we come over and take a look at Apple not having a big down day, down 1.41%, just kind of hovering right around this area, kind of where this high volume area is on the composite profile. We take a look at Microsoft real quick. Microsoft is trying to turn back down, but you know who did not turn down on Friday? And that was Tesla. Tesla essentially filled this gap over here, now trying to make a run back up. So when the overall stock market was red on Friday, we saw Tesla was actually up 3% on the session. That's something we most certainly want to take note of. And let's not forget, we've been seeing Bitcoin run. And now after Bitcoin has put a high end, Bitcoin is doing nothing more than having an upper level consolidation. Are we about to see Bitcoin blast off and come all the way up here towards the ABC projection at about 108,000? Now, when we come over and look at the Dow Jones real quick, look at the diamonds. And one of the areas we've been talking about, I said, when the pullback gets underway, one of the first areas I want to watch is this previous all-time high swing. And notice right where we came down to on Friday, we just barely missed hitting that level and starting to get in towards gap support. Now, we look out here on the 4-hour chart, we see we just got a fresh cross on Friday of the MACD indicator lines. Then when we dive down and start looking at the 30-minute chart, notice we're already below the zero line and we're starting to get a bullish cross of the MACD line. Now we'll see if that'll be enough this week to push us up, potentially come all the way back up and fill in the gap. Now we touched on the Russell 2000 a little bit earlier. Now the Russell 2000 was strong earlier on in the week. Then we see it starting to crater lower. And now the Russell 2000 is pretty deep into the gap. We look out here at the MACD indicator on the daily chart. It looks like it's about the pinch, but we got to ask ourselves, do we essentially bounce back up and then roll over, come down, fill the gap, and possibly trade back into this high volume area? Now, if we do start to bounce back up, one of the areas I do want to watch is going to be near this high volume area on the composite profile, somewhere about 237 or so. Then on the 4-hour chart, you can see the MACD indicators are crossed to the downside. Then on the 30-minute chart, we got a fresh cross of the MACD lines, and we'll see, do we start to get a push up? We've had 1, 2, 3, 4 down days in a row, and we're going to have to wait and see, does this B as in boy shape profile, if we can hold above value area low, then that basically signifies we're likely going to test value area high. Anything above that, I'd look somewhere in the ballpark of 231.12. You also may want to focus on the minus development areas within that profile as well. Then as we come over, look at the NASDAQ, look how deep the NASDAQ got, all right? Already past the 50% level, came all the way to the 61.8 fib retracement level, and then we got a little bit of a wick. MACD indicator line on the daily chart just basically kissed together, has not quite crossed over. Then on the 4-hour chart, you can see the MACD indicator just falling out of bed, and we've had a lot of these gaps up from the election. All right, we had a gap up from the elections. We had this other gap, and I kept talking all week long. I thought this gap would get filled. I did not think the presidential election gap would be filled this week, and we got fairly close to it. The NASDAQ dropped a lot further than what I thought it would. Then on Friday, you can see we have that gap down. the MACD indicator lines now look like they're about to cross. But one thing that we are going to want to pay attention to are some of these minus development areas of the profile. Now, the most upper area is going to be around 500.69. We start breaching above that, then we're looking at a retest of gap resistance, and then we'll see if we can push deeper and potentially come all the way back, fill in the gap. Now, we come over and look at the futures markets real quick. Notice we had last week a 935 point range. Now, earlier in the week, it looked like we were going to form a D as in dog shape profile. That's kind of what I was anticipating. I take Friday off from trading. The market just melts straight down. We've had 1, 2, 3, 4, 5, 6, 7, 8 consecutive down candles in a row. And some of the areas I was looking for was this area right over here to come back and get tested. The market said, that's cute. Let's go a little bit further. And I said, if we get into this minus development area, watch for this next area down here to be tested. Well, that's where we came into. And now we've already auctioned a lot of these minus development areas in the profile, which we talked about in last Sunday's video as well. We made it down to here. We made it into this area. Now, I do think we will come back here a little bit as well. But I do think in the short term, we are likely going to bounce and try to back and fill in some of this area. Keep in mind, we have no major economic news to be released this week. There are a couple Fed members speaking, but it's not going to be Jay Powell. And if we look at a fib retracement, assuming the low from Friday holds, then the first area on the way up on this chart would be about 20,736. The 50% level is about 20,838. Then as we dive down, we start looking at the daily profiles on Friday. It was just a one directional market. I don't know if it was a blessing that I took off or not. You guys know I like to catch a falling knife. You guys see me do it time again during the New York streams, and that could have been a little bit problematic for me on Friday. All right. I don't like just one directional markets. Going back and looking in hindsight, wow, it looks so easy. But keep in mind, way up here, we still have that untested value area low. We did not hit it on Friday. And again, the market went the exact opposite way. Now, when we look at some of the profiles, some of these minus development areas that we created out here on Friday are going to be areas I'm going to want to trade. And we're going to talk about that Monday during the live stream a little bit more. But as we come over and we start looking at the volume profile levels, value area low is going to be 20,405.25. If we hold above that, I want to favor more towards being on the long side of the market. The point of control is going to be 20,496.00 with value area high being 20,675.00. Now you also notice we had a structure breakdown point up here at about 20,795. We had a clean break. We have failed to come back and retest that structure area. So this minus development area, if indeed the bulls can step back in this week, is going to be an area I do want to focus on. Now, do I think we're going to go lower in the long term? Yes. We still have a point of control down here at 19,664.75 that still needs to come back and get tested. But I would favor, some type of back and fill in this week and then potentially set up a larger ABC pattern on the way down to make it down to some of those price targets. Now we come over and look at the S&P 500 on Friday, gapping lower, and look where we came to, the 50% level. I kept telling you guys at some point we will likely get at least a 50% retracement on the S&P 500. Well, you know what? We're already there. We're also retested out all-time high in the S&P. And now we're going to see this week, all right, as the MACD indicator lines are trying to kiss together, do we start to bounce from this high volume area and start to kind of fill back and forth within this minus development area on the composite profile? Or do we start working our way down towards this next high volume area at 571.31? You look out here on the 4-hour chart real quick, MACD indicator lines just crossed to the downside on Friday. On the 1-hour chart, we're below the zero line. But on the 30-minute chart, you can see the MACD indicator lines look like they want to cross. Now, one of the areas I do want to focus on is going to be this whole minus development area, anywhere from about 588.87 down to about 587.78. Now, as long as we stay above value area low, I'm going to favor some of that upside testing. However, if we start breaking value area low, then I do want to refer back over to the daily chart and say, all right, are we going to come all the way back down towards this high volume area? Or at minimum, come back and test the gap from the presidential elections. Then as we come over and look at the futures markets, notice we came into this high volume area along with the minus development area. This is one of the areas I really liked. And for me, there was a lot of confluence at this area. One, we had a minus development area within the profile. Two, we had a prior swing point that we broke out from. Then number three would be the fact that if we pull a Fibonacci retracement from the swing low all the way up here to the swing high, that's right in the general vicinity of that 50% level. You can see we just barely went below it a little bit, and now we started coming back up. Now you can still see that this area on the composite profile still needs to be developed out a little bit more, aka we need to spend a little bit more time up in that area. Now, in order to do so, we need to get a bounce in this market at some point. Now, let's talk about where a bounce could come into play. If we just simply look at that last leg down, look at where the 50% level is. That's going to be about 59.51. 61.8 level will be about 59.68.7. Now, if we look at the weekly volume profile levels, I want you guys to pay close attention. Value area low is going to be up here at 5983.75. The point of control is going to be up here at 6,015.75, with value area high being 6,044.25. Now, since we're closing so far below value area low, if we get a strong push in the market, this would be a runner target. However, when we close too far outside of value, then a lot of times it takes a little bit longer before we come back and repair that area, where we come back and basically retest it. But we do have some minus development areas that we can focus on this week as well. And we'll see if we can make it back up, testing some of those levels. As we come over and look at the daily profiles, notice this is one of the areas that we talked about that I actually drew out during the live stream on Friday before I decided to take the rest of the day off. We came right back into that area. Boom. And then the market just simply dropped and essentially fell off a cliff. We got to remove the drawings. The areas that really attract my attention are going to be this whole minus development area within the profile. Then if we can breach above that, this next minus development area right up here, and the higher minus development area comes in about 59.53. Let's not forget, we still have that untested value area low at some point, should come back and get tested, along with the untested point of control at 6,004.75. Now, if you look at the volume profile levels, we have value area low at 5880.50. So as long as we can stay above this price point, I want to favor trying to look for a bounce in the market. Then we look at the point of control that comes in at 5991.50. We have the value area high at 5915.00. Now, one thing we do want to be mindful is if we break above value area high, then we start turning back down. I then want to start looking for lower targets. However, the point of control would not be my first target location. Instead, I probably target this little distribution node right here on the profile at 5903, or maybe even up here at 5907. Anything below that, then the point of control, value area low. Anything below value area low, we need to refer back over here to the weekly profiles and say, okay, can we start making our way all the way towards this high volume spike on the composite profile at about 57.61. Now, I do think if we get into this area right here, we will likely bounce, as it's a minus development area. You know, it's not very often that we just slice right through it. Normally we'll get some type of reaction from there. Then the market will come down a second or third time, and that's when we'll bust down towards the higher volume areas sitting below us. Now, if you guys want to learn more about Thomas DeMark's 9-count indicator, the indicator that called the dot-com bubble burst, that called the 1987 stock market crash, make sure to watch this video right here.